Hey everybody, just doing a quick little market update. Been out for the last 2 days. Anyways, going through some of the data from yesterday. Obviously, we had the Powell effect. He had a chat. He was talking about the markets being healthy and not needing some type of major intervention. In any case, the big things to change is that JP Morgan, the big bank, is expecting and actually pricing in for four rate cuts this year for the U.S. markets, which is pretty wild. So in any case, what we got going on today, this week, we do have still ECB data coming out for interest rate decisions. They will do as expected. And then pre-market, we do have the Philly Fed Manufacturing Index as well as the initial jobless claims. I'm expecting these numbers again not to hit the marks. As we saw yesterday, we saw some higher than expected core retail sales and lower than expected CPI year on year. So all in all, pretty good. Looking for those potential rate cuts going into May. Remember, tomorrow is Good Friday, so the New York Stock Exchange is closed, so reduced volumes are heavily expected. Just remember, low volume does not equal low volatility. And just to touch on next week, nothing really crazy going on. Monday is a holiday for several European countries, but the New York Stock Exchange will be open as usual. And then we have new home sales on Wednesday, some manufacturing data, as well as Thursday, initial jobless claims, home sales, and the like. That's going to be a big one in my mind, the existing home sales at the end of April there. Looking at Bitcoin specifically, since this is where we are, the big things I'm looking for here on the funding rate side are the fact that we are back at majority short. So we had a bit of a spike yesterday as the prices came back down, but we're still relatively range trading with the potential for breaking some structure to the downside only because we closed some lows. It's not confirmed yet. We'll know for certain if we have another major break of that structure, but we'll go through that. So funding rates are still majority bearish. Does not mean we have to go lower. Right now, we're still holding trend to potentially have a continuation, at least in the local structure. On the funding rate sides, relatively neutral. The token margins, USDT, OKX, so the big Asia market is pushing USDT as negative funding rates, of course, incentivize people to take long positions, especially market makers and liquidity providers. This is all looking relatively good for some potential continuation. On the liquidation side, if you look in the last kind of piece here, the big thing that's sticking out is that we are range bound. So there is a decent chunk right at 83K, at least in the local structure. And then above us, it is continuing to build to the upside. So just remember that we do have large liquidation still building above us. And the fact that the market is technically still short. The longer we stay in this range that we got into on the 13th, so about 4 days ago, the longer we can expect that any breaks of the highs actually start sweeping, not just for that failure now towards 87, 88K, but potentially sweeping the liquidations that are above that level, going potentially to 90K. Realistically, all of the major levels say the same thing. 96.5 is the high time frame level to gain back. If we do that, I'm pretty convinced that we're going towards a new all-time high. But for the time being, the high time frame is technically still down until we get some really significant change in the daily weekly closes. And we do have some structure below us at 83K. So any new secondary losses at 83, we are targeting back towards 80K, just because the higher time frame still says if we break that low, the expectation is we should still go lower until we start regaining the high 80s to 90 zone. Looking at liquidity heat map, we do have some big blocking orders stepping in below us, about 100 million on Binance specifically, down from like 84K towards 83.6. They've been helping manipulate some stuff, holding some of the lows. They've been moving and stepping in. If we do have some local breaks that start to lose some structure, the one thing that I am seeing that is if we do lose on the low time frames at 84, we have to come back down towards 83 and 83.2. Above us, we do have a little bit stepping in around 86K, but again, this is just holding price in the local range. One thing to note, if you look at all the previous kind of downswings we've had in this range, the big thing that sticks out is that these giant $100 million blocks have stepped in. They will actually pull them, as in like they're not acting as an actual brace. So if price starts accelerating towards it, expect them to pull orders. And if they do pull orders, that just means that they're expecting more downside. It's always more interesting when limit orders are pulled versus put in, because you don't know for certain if it's going to act as a magnet or as a buffer. And right now, like I said, if we do lose 84K, I'm expecting them to lose these, and then we come back towards 83.2 and 83K. But for right now, it looks relatively good, and we're just having a local swing fail right at 85. Gain of 85 means we test the highs. Test the highs, we might squeeze higher. Right. So looking over at the chart, so the big things that stick out to me on the higher time frame are, well, not the higher, but the 4 hour, is that we did actually break some structure going into Wednesday. So we had a nice pop above some of the highs that would actually looked relatively good. We're now still breaking back down. We've lost some local levels at the weekly open. These were regained yesterday after we actually closed below and actually looked like it wanted to lose 83K. At this point, I think any loss of 83 means we have to start sweeping some structure back down towards 79.5, 80K. So any losses under this low that reject and start to squeeze not just 83K, but 82.5, where we have the big Q2 current monthly open, then we do have to look at this as a bigger move. And technically, because we made a new low here on some of the closes, it's a bit of a nasty range. So what I would want to see here is some closes back above some of this 4 hour structure, back above 85K, which could potentially give us some local trending to break through and actually squeeze up into the next zone, which is around 87, 88K, which has heavy, heavy liquidations. So for right now, we're still in this kind of nasty range. It's allowing stuff to build on both sides. And the higher time frame is really simple. Have we gained stuff back really significant levels on the daily time frame? No, but it's potentially promising. You know, we've had two local daily gains of the range, right? If we have the low one down here, we had the next one here, and we're gaining back in the local structure now. So it's really simple. If we do actually start losing 83K and 82.5, then I am targeting 79.5, 80K, potentially even lower down towards 76. The higher time frame is still wrecked in the sense that we haven't regained daily or weekly priority. It's still lower highs and lower lows on the major swings. So if we do start breaking down, we at least target the lows and potentially new lows. But for that to happen, we have to break down. I know everyone's on Twitter or crypto Twitter is looking at this. They're like, much trend line and we're breaking out of it. That's fine. I just don't see it yet. I want to see some good closes above some previous structure. And ideally, we get a big close above what's actually holding us down, which is this. Any daily close above 87.5 starts to break things. And I mean break things to the upside, right? So even closing back above in this zone, ripping some of that local big short liquidation like that we have, then we're looking for higher lows to potentially have like a rounding bottom, some midterm accumulation phase. That would require, of course, that this is the spring of a little Wyckofian accumulation. But for right now, like I said, you're still technically downtrending to go lower until you get daily closes back above levels. That starts to break things. So realistically, playing the low time frames here, you're in a range. Play the range as such. You're having local failures. You've got some support building here at 84. If you start losing the low around 84, 1 down towards the daily open, 84K, I would then expect to test back towards 83. It's small moves. Everyone's kind of going into the weekend, but there are some data points coming out pre-market. So there might be some market open volatility. Expect some, morning open reversals if the price starts gapping up or lower. Across the board, looked relatively fine. The VIX is still at 30. Just FYI, we want the VIX to close end of week, end of day today, sub 20, call it sub 28. If we could do that on the VIX, we might get some fireworks, especially going into next week. But generally speaking, these long holiday weekends, there's a lot of manipulation, lots of volatility, and we could definitely break stuff. So be prepared for that. The big things here are very simple. Play the local ranges. It's testing swing structure very cleanly. If we do have some local failures that loses kind of mid-range support, you come back and test the range lows. If you have a continuation into this zone, you want to test the highs. It's that simple. So any gains there, test the highs. Overall, we have the potential for some high time frame reversals. It's not set in stone yet. It's still in the range. Play the range until proven otherwise. Local time frame is technically up from the lows. Higher time frame, we need to see closes above. Yeah, 80, what is it now? What did I say? 87.5. Yeah, that's it. Take it easy and catch you after the long weekend. Peace.